All right, I think we're set up here. Good afternoon. It might be the morning still for you. Who knows? It might be the evening. Let's get a reality check here to make sure we're seeing the NinjaTrader platform on our screen and we could hear me okay. Me being Jim Cagnina. Hello, hello. Anybody out there? Dan says all good. Sweet. Thank you, Dan. Appreciate that. Dr. Amir, awesome. Thanks for being here. I am able to see on the fly here the Zoom participants Q&A and the YouTube ones. William gives me a positive. Very awesome. Facebook, we're going to do some cutting and pasting, but that's okay. We'll be in good shape. We're going to get started here in 2 minutes. We'll start right on time. And in the meantime, we'll kill some time with me just saying welcome. Thanks for being here. Interesting day today. A lot of some significant size candles. Looking at a micro NASDAQ on our screen right now, the micro NASDAQ December 2021 futures contract on the screen right now. Tony, hi there. Thanks for being here. Appreciate it. Alex gave me a ready to go on the Zoom side. Perfect. We'll go exactly on time. Let's give it a few more seconds here. It's almost noon. I'm East Coast time. Noon East Coast time. And do want to invite everybody as we go. Feel free to type in questions in the chat box, and I will do my best to answer them. And try to pick them up as we go. Sometimes I get a little bit ahead of myself and I have to go backward a little bit, but I'll try to keep up today. Try to keep moving forward. Badreddin, hello. Did I say that correctly? Badreddin? Hope I did. I apologize if I didn't. I hope I did. I hope we're all good to go. Oh my goodness. All right, we're just about there. All right, it is officially 12 o'clock here. I do want to welcome everybody to today's event. We're going to talk about top 5 indicators, at least top 5 indicators in my mind. My name is Jim Cagnina, and I'm the Senior Education and Training Specialist for the NinjaTrader platform. We're primarily focused on futures trading today. Futures and options on futures are not suitable for all traders and investors. Oftentimes in futures trading, traders are exposed to a large combination of leverage and volatility. And although that is an equation for opportunity, it's also an equation for risk. Only fund your futures trading account with risk capital. We understand everyone is unique in this world. My personal definition of risk capital, this is me personally, Jim Cagnina, money I could afford to lose doesn't change my lifestyle, doesn't lengthen my retirement horizon, or doesn't overly anger Mrs. Cagnina. The last part might be a little tongue-in-cheek, but it's really not. Stress in life matters. I guess that's my point. Be in a good place. Whenever we're under stress, we tend to make bad decisions. At least I do, for sure. So any questions on risk, type them into the chat box. Be happy to talk to you about it. Easy on the day trade margins. We'll be using the NinjaTrader platform today. I am logged into the software in simulated live mode with a real-time data feed. So again, welcome. Appreciate you guys being here. And I'm going to go ahead and take that down. I could see. All right, I pronounced your name right. It's a miracle. All right, so here's the NinjaTrader software. Just real quickly, overview. We have the control panel on the upper left. I'm connected. You can see that green dot. I'm connected to a real-time data feed. I have a couple of simulated live accounts here that has, my balance and all that stuff in it. I have a market analyzer, which is like a quote board, if you think of it as a quote board. That's kind of on the right. On the far right is the Superdome, right? This is a trading ladder. And in the center, there's a chart. Okay. And we're going to go through a process of building a chart book similar to the one you see here and talk about the different elements and aspects of it and how maybe you could use it in your technical analysis. And this is, my approach is kind of simple. It's not super complicated. It's not, the older I get, the more I kind of can move back to simpler than more complicated. But so what we're going to do is we're going to start brand new. We're going to do a brand new chart. We're going to start from scratch. So I'll go ahead and just add a chart here, and we'll use the E-mini S&P. And I'm going to go ahead and we're going to do a 10-minute candle chart, right? 10-minute candle chart is going to be my default. So the value 10 there, I'm going to leave alone, and I'm just going to hit OK. And it's going to open up a new window. And here we have a naked chart, a bare chart. Nothing's on it, right? And it's a candlestick chart, right? It just tracks the high and low of the market price in 10-minute increments. And then it also shows where the candle opened and closed for that particular period. So that's kind of the graphical representation. And this is today, actually live real time. Okay. So the first indicator, the first thing I want to see, I want to add what's called a moving average cross, and I'll show you how to add it on the NinjaTrader software, and I'll talk about what I'm doing as I go. So I'm going to right click anywhere. This is kind of a shortcut. Right click onto the chart itself, and it gives me a menu, right? And this menu has a whole bunch of stuff in it, but I'm going to find the indicators area here. It's the fifth fifth entry down. I'm going to click on that, and it's going to populate a new window. This is my indicator panel here. I'm going to scroll down. The first thing I want to do is add a moving average cross. Now, there's all sorts of different kinds of moving averages, right? There's the exponential moving average, a simple moving average, Wilder moving average, Hole's moving average, a double, triple moving average. So there's all sorts of different kinds here. But I'm going to scroll down, and again, remember, I'm simple, so I'm going to keep it as SMA, simple moving average. I'm going to highlight it. I could either double click on it, or I can go down to the bottom under configure and click add. Either thing does the exact same thing. It brings it down to the configure section. And when I click on the configure section, I'm going to go ahead and highlight it. And then I'm going to go over to my properties. I want to change this a little bit. And I'm going to create my first moving average. And I'm going to create it as a 26 period moving average. So I'm going to change the period to 26. And then under calculate, I'm going to calculate this on each tick. So every time the market changes price, tick by tick, it's going to recalculate this particular indicator. And it's a lagging indicator. Okay. So it's really what it's doing is calculating the average price for 26 periods, including the bar we're on, right? So the bar we're on right now is moving around, and then 25 periods back. It's calculating a simple moving average, right? Just adding up those prices, right? And then it's dividing it by 26 and coming up with an answer, right? And it plots this line across the chart. The only other thing I'm going to change is the color, just to make it easier to see. I'm going to change it to blue, okay? 26 period blue. I'm going to hit the apply button. And there it is. So here's the moving average. It's relatively slow, and you can see it ebbs and flows, right? It moves up and moves down like a wave, as the prices of the market changes over time, right? And again, it's a lagging indicator more or less, but it's kind of showing us, how the moving average changes over time. So that's kind of leg one. That's the first step in me adding this moving average cross. And I'm going to call this my slow moving average. Slow meaning we're using a lot of data points to calculate it. And so the next data point is going to, once we get a new candle formed, it's going to move a little bit less quickly. It's going to be less sensitive to price than a fast moving average, which is going to calculate a smaller amount of bars. So let's go ahead and add the fast moving average. And I'm going to go back, right click. I'm going to go to indicators. I'm going to go all the way down to SMA again. And SMA is right here. And this time I'll double click on it just to show you how that works. And it added it down here. And again, the default's 14. I want to highlight it. I'm going to change this to 6. Now I'm changing it to 6. I'll have 26 and 6, and I'm using a 10-minute bar. And this is just my kind of preference, right? You might decide you want to try 20 period and a 10 period, or a 20 period and a 5 period. So this is all personalized, right? I like 26 and 6. And so 6 is going to be my fast moving average. And let's go ahead and change calculate on each tick. And so I did that. The only thing I'm going to change is the color, again, to help us see it better. And in this particular case, I'm going to make it a lighter. I'm going to make it red, right? So red is fast. And let's go hit red. And oops, kind of move this up. I'm going to hit apply and okay. All right, so now I have a moving average cross on the actual chart itself. And you can see it's red, right? But it's more jagged, right? It's crossing over the blue, crossing under the blue. It's all over the place because it's more sensitive to price. It's only calculating 6 data points for a moving average as opposed to 26. So let's say we have a big move in the current period that we're in. That's going to have more of an impact on the fast or the red than on the slow. Okay, so, and I'm going to show you how I use it, but I'm going to take this to the next level here and simplify this a little bit. I'm going to right click, and I'm going to go ahead and try to make it easier for us to see, because right now it's kind of overlaid on the chart and it's kind of hard to see. So I'm going to go back to indicators again. And I could have done this the first time I set it up, but since I'm walking you through it for the first time, I'm going to show you. I'm going to click on the 26, right? And then I'm going to change the panel, right? I'm going to create a new, we only have one panel so far, right? The panel, one space, right, where the candle is. I'm going to create a new panel, and I'm going to hit apply. And what it does is it moved that moving average, the slow moving average to a new panel, panel 2, right? It created panel 2. So now I'm going to go back to my indicators again, and I'm going to select on my fast moving average, and then I'm going to go to panel. Instead of creating new, I'm going to create 2, right? We already created 2. So I'm going to hit 2, and I'm going to hit apply and okay. And so it's moved the whole moving average cross is exact same as it was before, but now it's in its own panel. We can see it a little bit better, right? And you could change the colors, the line widths, and all of that stuff, but we're going to keep it this way for now. So how do I use this? What do I want to look for here? So let me kind of expand this a little bit. It's really easy with the NinjaTrader software. And you can see the blue is the slow, red is the quick. And so I look for a couple different things. Let me get my crosshairs out to show you. So I like to look for crossovers or cross unders, right? So when the fast one crosses over above the slow one, that's suggesting that near-term prices are moving faster than longer-term prices, and it's suggesting an upward movement, right? Now, keep in mind with any one indicator, there isn't this. It's not a signal by itself, right? It could be, but typically, really, what you want to see is other things to help give you a confirmation on your trade idea. So right here, the signal would have been actually pretty good. By the next candle over, we started to cross, and by the next candle over, we have confirmation that the fast crossed over the slow, right? So that's pretty good signal maybe. And you want to wait one or two candles to get that confirmation, because I think I lost my internet connection, guys. Give me a yes or a no if I did. I definitely lost it here. Let's try to regain it. Hopefully I didn't lose my complete internet connection to the actual event itself. And let's try to get back on our feet and see. Okay, I'm back on my feet. Could you guys hear me okay? So we could hear you. Okay, good. All right. So what I was saying was I like to see a couple of candles to confirm the signal, and one signal is generally not enough for me, right? So one signal is generally not enough for me. So I want to see a couple different signals to confirm my trade idea. And I'm having some in my home office here in Charlotte, North Carolina. I'm having some difficulties, but that's okay. We're going to keep moving forward here, since you guys could still hear me. The opposite is the cross under, right? So when the fast crosses under, and here's a good example right here. We crossed under, the red crossed under the blue, and so we crossed under, and then again, a couple candles later, one candle later, maybe I got a confirmation, and it may or may not have been too late to act on that signal as a standalone again. So sometimes it doesn't work, and sometimes it does. But that's kind of the first thing I look for, right? The first thing I look for on a moving average cross. There's a second thing I look for too, and that's literally are the moving average crosses converging or are they diverging, right? In our first example here, where we crossed over, we had a prolonged period of time where it was diverging, right? In other words, the distance between the fast and the slow was increasing. This area was getting bigger, right? And that kind of also helps confirm the momentum of the move, right? Confirms the momentum of the move in addition to the slope of the line itself. So is it converging? Is it diverging? Those tell us whether or not the trend's likely to continue or likely not to continue. So that's the second thing I look for on a moving average cross. So it's kind of like indicator number one. And again, as it's on its own merits, consider other things also to look at as you're going through your technical analysis process. Number two, I'm going to add what's called an oscillator, right? And there's all sorts of different kind of oscillators. Oscillators generally, they oscillate. There's an equation that's used to develop the oscillator, and it oscillates around a zero line or a middle line, and there's usually a top band and a lower band that it kind of oscillates around in a linear fashion, right? And so there's all sorts of different types of oscillators here. You could just right away. There's the Arun oscillator right at the top. There's the Chaikin oscillator right here, and the list goes on and on. NinjaTrader has it all on here pretty much. I mean, I don't see one that's a recognized oscillator, and even some that aren't recognized oscillators. This one's called the ultimate oscillator. So there's a lot of different ones on here, and the one I'm going to use actually doesn't use the word oscillator in it, but it's called the Commodity Channel Index, CCI. I'm going to highlight that. I'm going to click my add button at the bottom, and then I'm going to go ahead and customize it. The default here is 14 periods, but on a 10-minute chart, I'm going to use 20. I would experiment with different numbers to see what works for you. Or again, this is just kind of what I'm used to, what I like to see. Calculate, again, is on each tick. It'll calculate this on each tick, and it will move around accordingly. I'm going to change the colors here a little bit. I'm going to make the color of the middle line of the CCI blue. And I'll go ahead and kind of put a 2 there to put a color on it, make it darker. Hit apply and OK. And in this case, it added it to a new panel, right? I didn't have to add it to a new panel. I already added it to a new panel, which is super helpful to me. Now, this particular oscillator, the conventional wisdom, and again, this one oscillates around a zero line, right? In the equation, you could look up. I used to show the equation, but you could look it up on Investopedia or one of those websites. I don't know if it helps knowing the exact equation or not, but it oscillates around a zero line, right? And the conventional wisdom is if the CCI is over 100 plus 100, like we have here, the market's overbought. If it's below 100, like we have down here, the market, below minus 100, the market is oversold, right? And that's the original idea, overbought and oversold. Now, we've seen times where we've been in an overbought condition for a really long period of time, and it continues to appreciate in price, and it's kind of a false signal sometimes. So from that point of view, I like to see how strong or weak it is, but I also want to look at the slope of the CCI and see how quickly it crosses from a minus 100 state or lower past the zero line to a positive 100 state. That kind of velocity, that suggests velocity in price, and it suggests that there's a price move afoot, right? A price move afoot. Alternatively, same way on the way down. We're crossing over 100, crossing down below 100 quickly, or we're crossing down below zero quickly, or we're crossing down below minus 100 quickly. And again, a move is afoot. And I'm just going to line up my cursor here. And remember, past performance not indicative of future results. But this morning, in the 940 to 950 bar, we crossed over below zero, and sure enough, we continued with our momentum south, right? We continued with our momentum south. So that would have been a good signal. But again, on its own merits, it's just one piece of the puzzle, just one piece of information for me to decide You know, do we want to go long or do we want to go short? So I'm going to go ahead and just kind of use my mouse really easily to kind of adjust it downward. And right now we're at CCI is at 25, right? It's not suggesting any great price movement right now. And, you know, the velocity of the move is kind of linear here. It's kind of straight. And we're not moving that fast right this very second. And, you know, it's 12:17 East Coast time. Everyone's at launch. Not surprising. Lower volume period of time. So Stephanie asked, any tips on how to select indicators? Since there are so many, it's hard to choose which one. Well, I'm selecting them for you, Stephanie. I mean, this is what the purpose of today's event is. I'm going to end up with a workspace here that we could use and we can analyze the market. So you could use mine if you want. You don't have to use mine. You could have your own oscillator. You could have a different moving average cross. And that's all part of the personalization process as you get really familiar with how futures trading works. But the one that I'm creating right now is the one that I use every day. And when we do our Tuesday and Thursday live trade setup events, looking for trade setups, this is the look and feel you're going to get. So I'm going to add a third thing now, and this is called volume profile. I'm going to go ahead and right click again. I'm going to go to my indicators, and I'm going to scroll down until I see a thing called order flow volume profile. And I'm going to highlight it. I'm going to click my add button. And then once it's added to the configured section of the software, I'm going to highlight it. And then I'm going to take a peek at my settings. And again, calculate on each tick. Calculate on each tick. We're going to keep all of this stuff simple. The only thing I'm going to change is ticks per level because our range today was pretty big and I want to be able to see the data better. So I'm going to go ahead, you could set it to what you want, but I'm going to change it to 4, right? There's 4 ticks and a point in the E-mini S&P, so it makes sense. I'm going to change it to 4. Value area stays at 68%. That means 1 standard deviation, and I'll talk about that in a couple seconds. You know, we could do alignments and color changes and opacity changes and all that stuff. I'm going to keep that all the same. At the very bottom here, I'm going to click on this label, show volume labels. Way at the bottom, show volume labels. I'm going to click on that. I'm going to hit apply and OK. I'm going to get this blue, light blue, I don't know, sideways pyramid, we'll call it. And that's my volume profile. And what it's done is it tracks volume from the beginning of the session, right? And the session, remember, it's a 23-hour session. We started last night at 5 o'clock Central or 6 o'clock East Coast time. And we went nonstop all night, all morning, all day till now. You know, the close is not until, we have 3 more hours left for the close. So this is just tracking cumulative volume at each price point throughout the day. Now, you can see the volume numbers here, and I'll go ahead and kind of expand this so we can kind of zoom in on it and see it a little bit better. You can see the volume numbers here for each histogram bar. And remember, we set each histogram bar to 4 ticks or 1 full point, right? So what this is doing is it's adding volume in real time to the histogram bar based on that. Anytime volume accumulates in those 4 price points, 4 ticks, then it will add a number, numbers, and whatever the volume is, to the histogram bar, and the histogram bar will increase in length, right? And again, we're in a low volume point of the day right now, but you can see, 29,367, 29,369, 23,370. You can see it accumulating right now and moving around, right? And so let me just kind of bring this back down a little bit so we can see the whole thing in its glory. And so what we're looking at here, let's go all the way to the front. Sorry about that. And there's some color coding, right? Dark blue is called the value area. This is 1 standard deviation worth of volume for the day. That 68 number we talked about, right? 1 standard deviation of volume throughout the day. The light blue at the top is called prices above value. And it's light blue. We have it color coded. And, you know, prices above value. Well, I don't know who the genius was that came up with that name, but it makes sense. And you can guess what the light blue at the bottom is called, right? It's called prices below value. And that's just kind of a standard industry nomenclature. I didn't make that up, but I'll refer to those as we go. Now, there's 3 points of interest for me right now. Three points of interest include the point of control, which is this gold line here. And that's simply the biggest histogram bar. We had 52,392 contracts traded this session at these 4 tick levels at this price point. And it's the longest one. It's called the point of control. And oftentimes, not always, but oftentimes, the point of control tends to act like a magnet throughout the day. And this is just based on my observation. This is what I think. But I do see it happen often. And, as an example, let's kind of let me get my crosshairs back. No, we won't get the crosshairs back. I'll use the tickle. Let's just go across here to this, I have an extension here so we can see it. 3/4. And we've traded it at this price once, twice, 3, 4, 5, 6, 7, 8, 9 different candles. Right throughout the day, starting at 8:40 and going up until, I don't know, almost noon. And now maybe it's going to touch that price point again, right? So you see that phenomenon a lot where, this market, these markets are a fight between buyers and sellers, supply and demand. And there's this constant rubber band kind of effect, right? Or a band effect where it drives prices in a somewhat volatile way, up and down, and oftentimes it trends one way or the other. But even if it does trend one way or the other, it still kind of oscillates around, right? And that's why we have our oscillator also. So point of control is an important point for me. I always look for the point of control, where are we at? And it gives me a place to maybe place a point of interest, maybe to place an entry order or place a stop order. Or something like that. Same is true at the top of the value area, the transition level between the value area and prices above value, right? So I'm going to go all the way across here, 44.75, and I'm going to say, aha, this is another point of interest for me. And maybe I want to put an order in to sell a contract if the market gets to there, or maybe I'm already short and I want to put my stop loss up there. So this is just an area of interest that I'm going to use when I formulate my trade strategy. Correspondingly, the transition between value and prices below value is also marked on my chart. And you can go all the way over here to 43.24. And a trader who might be short might say, hey, this is going to be my target for my profit target. Or they might say, if they don't have a position, hey, I might want to go long if we approach this number down here. And so that's kind of some of the price points, some of the ideas that you could generate in terms of entering and exiting could be used with volume profile. And I think it's very important. Today's profile is relatively symmetrical, relatively Gaussian, bell-shaped. Sometimes there's a double distribution. And if you just imagine a double distribution, so there's one distribution up high here, and then kind of a divot or some price weakness in a second bigger distribution somewhere else on the actual profile. This particular case isn't too far out of whack, but yeah, there's a little bit of a volume accumulation up high around 43.50, which is another area of interest to me, right? I mean, it traded at this price for a long period of time. Look at all these candles that bisected that 43.50. That's a powerful target in my mind. Okay, so let's see, one, how many did we say we're going to do? 5? let's add yesterday's, prior day's information. I'm going to right click here. I want to see what happened yesterday. And I want to see that on the chart. So I'm going to go down to, it's not previous day, it's prior day. Prior day, open, high, low, close. I'll double click on that and I'm going to highlight it down and configured. And we could show the close, we could show the high, we could show the low, we could show the open. We could show whatever we want. Right now, I'm particularly interested in yesterday's close and yesterday's low. So I'm going to unselect high and select unselect open. You could keep them there if you want, or it's up to you. Hey, D, give me 1 second here and I'll get to that question. That's a great question. So I'm going to look at the color coding too, because I'm going to show closed. I'm going to show low. Low is, of course, red, and then close is purple. And that's really all I'm going to do here. You don't have to change calculate bar and close because this is yesterday's data. It's fixed. It's not going to change. So I'm going to hit apply and OK. And it kind of puts these hash marks on there here. So there's another area of interest right now, right? Yesterday's close. So Rodney asks from Facebook, and no, wait, I'm sorry. I'll get to your question in a second. Rodney, you are second. D asks, would you use the same simple moving average settings for micros? Remember, on the simple moving average settings, we used a 26 and a 6. And my answer to that question is yes, because it's more of a factor of the 10-minute chart. And in my trade strategy, I want to be in a trade for less than an hour, right? I want to be in a trade for less than an hour if I could pull it off. So it's unique to the 10-minute time frame. I could change my time frame to my chart to whatever I want. I mean, there's minutes, there's tick charts, there's daily, weekly, monthly, whatever I want. I just simply picked a 10-minute chart as my preference. You might have a different preference. This is my preference. So yes, it would be the same. And keep in mind, the micro E-mini S&P is nearly, it's like a cloned market of the big S&P, the E-mini S&P. It's only 1/10 the size smaller, right? So the micro is 1/10 the size of the classic, and prices move in unison. They're 100% correlated. I mean, you might have a tick off here and there in the heat of battle, but more or less, it's the basis of this contract is the same. And between the market makers, the arbitrage folks, and the regular market participants, pricing is the same. So it does it. Yeah. To answer your question the long way, sorry if I'm beating this dead horse. Yeah, I would use the same simple moving average on the micro version of this chart that I would in the classic E-mini. Claudia says it works for 1 minute too. Sure. Yeah. Well, that's absolutely. And again, that's a good comment too, because your time frames, as you go through the experimentation process, your technical analysis that you're going to do, your time frames on your charts sometimes do and sometimes don't match up in sync with indicators in the best possible way. So if the 1 minute's working for you with the same settings, that's awesome. And that's great. So anyway, so Rodney, what I do for multiple time frames is I'll just hold them side by side, or I'll just toggle down. There's tabs in the series on the bottom. I don't have side by sides in the same window per se, but you could easily, with the NinjaTrader software, just kind of right click to duplicate a window up there in the title bar, change this to a 30 minutes. Then hold these things side by side, and voila! Now I have 10 minute on one side, 30 minute on the other side. That quick, that easy. That's how I do it. But for demonstration purposes today, we're going to stick with one chart. Okay, so we added yesterday's information, and again, another area of interest for me. Are we going to make new? Are we going to end up positive on the day in the E-mini S&P, negative on the day? I know all my fundamental analysis I've already done. All my long-term technical analysis I've already done. So that's an important part for me. Now, the third area, it's not really an indicator, but it's a Fibonacci retracement. Fibonacci retracement. And this is based on the golden triangle, the Fibonacci sequence. And if you remember your high school math, Fibonacci sequence is you take 0 and you add it to 1. And the answer to that is 1, right? And then you take the next number, and then you take that 1 and you add it to the next number, which is 1. Then you get a 2, and then you take 2 and you add it to 1, and you get a 3, and you take 3, you add it to 2, you get a 5, you take 5, you add it to 3, you get an 8. 8 plus 5 is 13, and so on and so on. The sequence goes on and on, right? It's the Fibonacci sequence. It reoccurs in nature and all this stuff. And then when you start dividing numbers in the Fibonacci sequence, you come up with these ratios, right? These magical ratios. And why they work in trading, who knows? But they do have a tendency to provide areas of interest, again, to help supplement everything else. And maybe one of the reasons why it works is because everybody uses them. right? I'm not the first person to invent this. I'm not just making this up. It's in every charting software you see. And so I'm going to go ahead and add Fibonacci retracement. And there's two ways I could apply it to this chart right now. I'm going to show both ways. The first way is I want to take the high of this move and go all the way down to the bottom. So I'm going to get my crosshairs out so I'm a little bit more skilled. And I'm going to go high. I'm going to click once. I'm going to drag all the way down to the bottom. And I'm going to line my crosshairs up with the low, and I'm going to click again. It adds this kind of grid with a series of numbers to it. And I'm gonna make a couple inline edits right now. I'm gonna click on this 100%. I'm gonna right click. I'm gonna go to properties. Remember, a lot of right click stuff works here in NinjaTrader. It's pretty cool. I'm gonna go down to my levels, 7 price levels. I don't want 7 price levels. This 76.4 isn't a real Fibonacci number. It's on these softwares because it matches the 23.6. It's 23.6 away from 100. That's why it's there. The real Fibonacci number in this sequence is 78.6. But I'm going to remove it all together, right? I'm not going to add the 78.6 because at that point in my mind, it's no longer a retracement. The trend has changed. The trend has moved. So I'm going to hit apply and OK. Okay, so I've set this from high to low, right? And so it adds these numbers here. 50% is not also, or isn't really a Fibonacci sequence number either, but it's just so universally added and used as the midpoint that I'm going to keep that one. That's a pretty good one. So how would you use this? Well, one example would be, okay, so we're in a bear market right this morning, and then but we pulled back up, we retraced all the way back up past the 23, past the 38, past the 50 to the 68, 61.8%, and now things are breaking down again. So the conservative trader might have said at a certain point, I want to sell a contract if it gets to 68.1, or more aggressively, someone might say, I want to sell it if it gets to 50. Super aggressive, I want to sell it if it gets to 38. Alternatively, maybe as the market retraces and it passes 23%, the trader might say, hey, I want to go long here now because it's going to retrace more, right? So these are kind of things traders think about. And I'll tell you my point of view as we get a little bit further into this. But that's kind of how I look at this as a tool. So now we have volume profile, we have a Fibonacci, and then we have a moving average cross, and we have a oscillator at the bottom. There's another approach to Fibonacci. And remember, when I drew this Fibonacci, I went high, I started high, and I went low, high to low. Now, let's say that you wanted a more maybe your trade duration is going to be a little bit less, and you want to be in and out a little quicker, and you want to analyze a different level with Fibonacci. I'm just going to show you real quickly. I'll leave that here. I'll just do a second one here just to make it easier. I'll go drawing, I'll go fib, or you could use your F8 key, as somebody pointed out earlier in today's live trading session. And this time I'm going to go low to high, low to contemporary high, right? The recent high, not the daily high, but the recent high. And I'm going to say, oh, we've been trading in this range for a while. So let's see what this fib looks like. I'll go low to high right here. And now I've got kind of a mini fib line in here, right? A mini fib line in here. And what I'm looking now, the numbers look a little different, right? Again, I'm going to go ahead to properties. I'm going to edit this. I'm going to get rid of that 76.4, and I'm good to go. And don't forget, when you save your workstation here and you close the platform up, it'll memorize all this stuff. So you don't have to do it every day, right? Just one pro tip here is when you're done for the day, don't close any individual windows. Close this control panel, and then next time you log in, it'll pop everything up the way you left it. Okay. So now you can see, everything is consolidated a little bit tighter, and it gives us smaller ranges to consider. Where is this retracement? Is this truly a retracement? Do we want to buy it? Do we want to try to put an order in to buy now at the 23? Do we want to put it at 38? Where do we want to go with it? So it's particularly also kind of important because when you look at this upper distribution here on the volume profile, you could see a lot of that volume happened before this really ginormous red ugly candle that happened at 940, shortly after the open to 950. And you might say, well, the paired end of the market changed after the open. Therefore, this information up here is not as important to me, right? This information right here is not as important to me. So it just depends on your point of view. Do you want to take a longer term point of view? Are you willing to be more patient, or do you want to be more aggressive? So I'm going to go ahead and I'm more patient. That's just the way I am. And I'm going to go ahead and remove the shorter term fib. Okay, so now what do we do? Now what do we do now? We got all this information on the chart. We have a couple of things cooking. Let's take a look. CCI is over 0, but it's kind of flatlined, right? Nothing's moving quickly. The simple moving average cross, the fast one's moving over the slow one. That suggests maybe some upward price pressure. The point of control here is, let's see, 35 even. That's about 5 handles or 5 points from where we're currently trading. And you can see where we're currently trading from that black label on the right that's moving around. So that's area of interest right there. And the other area of interest, of course, is the top of the value area. So there's a couple of different strategies to use here. And one of them is if you think the market's going to go up in price, and the other one is if you think the market is going to go down in price. So I'm going to suggest a short trade right now. And remember, in futures trading, you could sell instead of buy. And the reason I'm going to suggest a short trade is a couple of things. One, I'm going to draw a rectangle here to show you a little bit better what I'm talking about. I'm going to draw a rectangle right in there. What I've identified is an area of what I'm going to call resistance, right? A candle hasn't closed in this rectangle since this big red bar, right? Sellers keep pushing it in. Buyers aren't strong enough for a candle to actually close in there. So I've identified that as kind of a short-term area of resistance. That's kind of number one. Number two, we're right at that 68.1% retracement. I like that, right? That's kind of number two. And then lastly, CCI is going sideways, not doing much. And the moving average cross isn't very extreme yet, right? And it might not be extreme. It could do one of these deals over here like it did at 8:30 where it crossed over under real quickly. So that's the only indicator here that's a little out of whack, but everything else I feel pretty good about. So what I would do is I would go to my 61.8% retracement level. I'd right click and I would, whoops, I'm sorry. Let me get on this side of the fib line. I would right click. Do I have my chart trader on? Let's double check to make sure I have my chart trader on. I need to put an account in there, Jim. There we go. I have my account in there. And I'm going to hide it again because I want to just right click, right? Everything's right click. You right click, stuff happens. Right click, I'm going to go ahead and, again, on real-time practice account, simulated live mode. I'm going to click and send an order to the exchange, if this were a live account, to sell a contract at 42.50, right? I like that retracement. I like the fact that it's bouncing up against my rectangle there. And if I'm wrong, it's really easy for me to see where a stop loss would be. And in my opinion, my stop loss is going to be somewhere above this high wick that we see right here in this green candle, right? So I'm going to go give myself a little bit of breathing room to the top of the rectangle. I'm going to right click and I'm going to put buy stop market. So now I have 2 of my 3 legs of my trade on, and now I'm in wait mode, right? So right now, moving average cross now is going a little bit parallel, and I'm used to looking at it right now. For days on end, we had an order that's filled right now, and so now we wait, right? And the other thing we have to do now, which is very important, is where should our profit target be? What's a reasonable place to expect this market to go to if we are in fact right? Now we could be wrong and we can get stopped out or it can go sideways forever, but we're gonna consider points of interest on maybe where to put our profit target. And certainly 50% is one of them, right? 50% is one of them. And the other one is the point of control, right? And I would suggest that, hey, somewhere just maybe a little bit above the point of control, some between 50 and 38, someone, be above the point of control is a reasonable place to try to put a profit target in. So let's go ahead and do that. And I'm just going to simply right click and I'm going to go ahead and click my buy limit right there. So now this is the anatomy of pretty much any change any trade ever made, right? Position, stop loss, profit target. That's it. Doesn't get much more complicated than that in terms of order entry. If you don't want it to be, it could be, but we're going to keep it simple. DE asks a great question. If point of control changes while in the trade, would you adjust your stop or profit target? And my answer to that is it depends. So in this particular scenario, I'm looking at a 60-minute resolution, right? Again, it's 10 minutes. I have a multiplier of 6. I'm looking at a 60-minute resolution one way or the other. And if we don't make that resolution and we're in triple overtime, then I'm going to suggest, well, what happens to the point of control while I was in this? For the point of control to change now, there's not really a good contender for another point of control, because this 52,300 contracts is a lot. The next biggest one is the one below it, right? And the other peak over here, you say, well, there's one up here at 43.50. It only has 28,000, 29,000 contracts traded here. So this probably will not change. It could, though. That's why this is a great question. Point of control probably won't change anytime soon. It's the slow part of the day. The Fed meeting minutes, FOMC meeting minutes are being released today at 2:00, hour and 15 minutes. At that point, everything's out the window, right? Because that's a piece of planned news we know is coming, but we don't know what's in it, right? And that certainly could move things one way or the other. Right, certainly could move things one way or the other. So up until then, I'm going to say, well, probably not. Probably going to do any trade management here. I want to see where the candles kind of go, and I want to see where what they look like. And candles are very, very important. Again, CCI is starting to tick up now. It's almost over 100. Is that problematic for our trade idea? Yes, but I'm not overly worried to the point where I want to change anything, right? And oftentimes it's a huge mistake to change. Once you place your trade based on your strategy, it could be a big mistake to actually move your stops around, because for either fear of missing out or from whatever emotional or irrational idea you might have. It's like, well, my trade idea is right, but I want to give myself some more time to adjust. And we put our stop in a way that I feel is scientific, right? It literally was, we identified an area of resistance, and then I took the top of that, the highest candle, I added about 8 ticks or 2 points above that to give myself some wiggle room, and I put the stop there. And I think it's a solid place to be, and I wouldn't move it, right? Even though we're down, almost 2 points, or $100 on a one contract trade on the mini S&P, I'm still not terribly worried, because the candle has not closed in my rectangle yet. And we have 6 more minutes to see if this candle could close, meaning the candle that we're in right now. Let me just switch over here. Right here, we're just, again, we're butting into it. We're trying to get in there. We can't get in there. Sellers are too strong, and I'm not too terribly worried just yet. So anyway, that was a great question, and I'm not a fan of moving things around initially. I want to give things a time to work. I want to see if my candle analysis was correct. The top of the value area, we just can't close above that. That's another reason why I strongly feel like this is an area of resistance. We can't close above that 43, 44 and 3/4 level. So I think we're all good right now. Now, could this trade turn into a loser? Heck yeah. Happens to me all the time. Could it turn into a winner? Sure. But I think our analysis are solid, and I've used all of my 5 common indicators. These are common things. This isn't something that's uncommon to develop my trade strategy. So Khalid says my order flow is not working with BTC, which I believe refers to Bitcoin, and data from Coinbase. Well, one of the things about trading on a regulated futures exchange is you get volume. You get volume profile, and you get a trading ladder, right? You get this trading ladder, which shows bids and offers 10 ticks deep. I'm looking at a micro NASDAQ right now. Let's just toggle back over to ES. So we're looking at the same thing, and you don't get this view on non-futures related markets, right? This is one overall global marketplace view. The trader in Hong Kong sees the same thing as a trader in Chicago, as a trader in LA, and Sydney, South America, London, wherever you're at. You're going to see the same transparency in this with over-the-counter products, especially over-the-counter products that trade at different places. You know, Coinbase is just one place to trade Bitcoin. There's other places to trade Bitcoin also. Again, you're not seeing all the volume anyway. So I'm not surprised that you're not seeing volume accumulation from a non-futures exchange. So I don't know if that makes sense to you or not, or if I'm even understanding the question correctly. But you know, you could use the NinjaTrader platform to trade a whole bunch of different instruments in addition to futures, you know, depending on what route you go. And Coinbase, again, is just like one exchange, and they might not even have present to you the cumulative volume profile of that particular, if you can call it a security. I don't know if you can call it a security. The regulators are fighting over what you could call it or what you can't call it, but that's the thing. So in any event, I don't know if I answered your question right or not. I think I did, but that's kind of my opinion, right? And I'm biased toward the future side because I've been doing it a long time and because I think it's pretty good. All right, so where are we at on our trade idea here? Let's kind of, okay, so far so good. So you can see the tail of, we penetrated into the rectangle again. We touched that top of the value area, but we didn't close above it. Didn't close into it, didn't get closely. Sellers came back in. Maybe they identified the same idea as I did. Maybe they didn't. Who knows? Now we're 3.5, almost 4 points into the trade on our side, on the positive side. Remember, past performance not indicative of future results. I do plenty of presentations where we get stopped out. But in this particular case, things are looking good, right? Things are looking up. And, you know, my profit target right now, we have a decision point actually to make, because I'm going to draw a second rectangle. I'm going to highlight this. I'm going to click copy. I'm going to right click, and then I'm going to go control paste. I'm going to create a second one. Oops. Come on, Jim. Easy with your, and I'm going to put this rectangle. This is a little bit weaker, but again, I'm trying to identify an area of what I'm going to call support. Resistance up here, support down here. You know, we haven't closed into this rectangle since this big, relatively decent candle around lunchtime. And it's a little bit less of a compelling case because on the resistance side, we haven't closed up in this rectangle all the way since back in there. I messed up my rectangle. Sorry about that. And actually, you know what I could do to even make it a little bit better for everybody? Let's just change the color area to something lighter color. There we go. Let's do the same thing with this rectangle. So, and we're getting into this rectangle here, and I expect it to, but again, I think it's a little bit less compelling, the support rectangle that I drew, because again, you know, not too long ago, you know, less than an hour ago, we did trade at that price, in that price. We traded through it actually very strongly. So again, this is kind of a weaker case for support than this is for resistance. So again, it's based on the exchange you're drawing data from. It to me, it doesn't sound like a platform issue. All right, any questions, anything, ideas, hopes, dreams? Type them in. I'd love to answer them. Stephanie, you're welcome. Remember, Tuesdays and Wednesdays, we do we look for live trade setups in the E-mini S&P. So pretty much what I just did without all of the discussion on the technical indicators, right? And you know, we shoot ideas back and forth, and it's a lot of fun. It's free. It's on the same registration page, I believe, that you probably registered for this event. It's also published on the NinjaTrader YouTube and Facebook channel. And it's, I would suggest maybe consider coming, and you know, we could have some fun, invite your friends and all that stuff. Yeah, so Khalid, so here's how you add it. We're going to right click. We're getting close to our there's some trade management strategies here that you could go into right now that I'm going to reserve that for another day. We're going to right click here. We're going to go to indicators. We're going to go to scroll down to where we find order flow volume profile. And you do have to have the right version of the NinjaTrader software to do this. So make sure you have the right version. You click on that, and then that's how you add it. I'll leave it up there for a second. You can see it kind of pretty good. You know, once you highlight it, bring it down to configured, click add, hit OK, and then you're good to go. Okay, so Edward says, I asked you yesterday about setting stop loss for high volatility markets like the MNQ. You know, we did have an MNQ trade idea today. And we did have that trade idea today. So I didn't really go into too much detail on it, but what Edward's referring to is the NASDAQ, and the micro NASDAQ has even more volatility per unit or notional value, or however you want to measure it, than an S&P does. And so oftentimes you have to give yourself some more wiggle room. But in this particular example here, I feel pretty good about where we placed our stop. And if we were looking at a micro NASDAQ chart right now, Edward, I would probably say this is a good place to be, right? Because the volatility would already be reflected in the candle themselves. Does that make sense? Okay. So, so that's it. That's where we're at here. I think we're almost done. Any last second questions, type them in. Just remember, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, which could be an equation for opportunity, but also equation for risk. So be careful, slow your roll on day trade margins. Don't overcapitalize, all that stuff. Be in a good place. And hopefully you will have some success. So Lai Ming, that's a great question. And I was contemplating that right now. So from a trade management point of view, there's a couple things I could do here. Since I'm 4.5 handles into the trade, and it's approaching that 1 o'clock number, I could do a couple of things. I could just leave it, right? Or what I could do is I could move my stop to break even, plus a tick, give myself 1 tick in there, and move my stop there and say, okay, now I've eliminated, you know, I've greatly reduced, I moved my stop loss down to below my entry price. And I'm kind of, you know, I've changed the risk profile of this trade right now because I was able to, and I'm gonna just kind of let it go. Or one might say, you know what, you know, this is taking too long. This is not, you know, I want to take profit and get out right now. And you can certainly do that as well. 3, there you could change your target and say, I want to be closer to the 50% retracement line. And because I think it's more likely now, because the velocity, we have buyers coming back in on this candle right now. You can see that big wick at the bottom, even though it's still 5 minutes from being over. And, you know, maybe I want to move my profit target to the, you know, right below the 50% or at the 50%. And that's a good strategy also. And it just depends on your strategy. One of the mistakes though that people do make, and okay, so we got filled there, but now let's see if we would have broken through our triangle and we have rectangle and we would have gotten a better one. You know, sometimes traders, I'll be sure you cancel this stop. You don't want to get a double fill. But one of the mistakes that folks make, at least in my opinion, based on what I've seen, and I've been doing this for 20 years plus, is you have a tendency to move your stop to give yourself some more room to let the trade breathe like a fine wine, right? You're moving your stop, increasing your risk profile, but at the same token, you don't do the same thing on the buys on the profit target side. You don't give yourself more room to breathe on the profit side. Instead, you do the opposite. What I just did, contracted it, right? So just if that, my only caution, or I guess based on my experience, would be if you're going to start moving stuff after you've decided what your technical analysis is, maybe there's a good reason for it. The paradigm of the market has changed, but be sensitive to the idea that the tendency is to give yourself more room on the stop side and less room on the profit side. And at the end of the day, we all know we have winners and losers, and then your equations start getting out of whack. So anyway, that was a great observation, Lin Ming. I really appreciate that. All right, I think we covered a lot of ground today. We had a lot of fun. We're going to do it again next week. And this is Wednesday, I believe. Tomorrow, Future Trading 101 event, same time, around, noon o'clock, noon, East Coast time. All right. Thank you, everybody, for coming. Really appreciate it. Had a lot of fun today. Thank you for the great questions and observations. And I do want to ask everybody to be safe out there and to be good to each other. Take care.